How far?
I'm in the Trading Hub live session.
Let us start because it's going to be a very long session. So first things first, if you are trading the Forex markets and you want to start the new week, the most important thing you should always do first of all is to go to your Forex factory and check the whole news for the week on every major pair that you are trading. Then you mark out your calendar and be like, okay, this day, so time, there's an high impact news. For example, now if I'm trading anything card related like card JPY, card CHF, and Euro card, AUD card, because I think I have those 4 pairs in my watch list. So if you are trading either of those 4 pairs, you know that by this 1:30 on Tuesday, you should be careful of any trades that you are entering, especially if you are scalping. If you are day trading, you don't have a problem. Or sorry, swinging. If you are swinging, you might not necessarily have a problem. But if you are scalping, there's every possibility that spread and slippage will be very high during this period. That is when they'll be having their CPI. So if you are trading AUD card, Euro card, GBP card, card JPY, card CHF, you should be careful during this period, especially if you are day trading on that day, because slippage might take you out. So it is best to avoid during that period, like maybe 5-10 minutes after, you can look for entries and continue trading. But if you are swinging, you might not necessarily have a problem. But if you are day trading or scalping, you might have to be careful during this period. So you mark it out that, okay, Tuesday, there's so news on card JPY. So you're already prepared ahead of that day. Then on Wednesday, there's NZD news. So if you are swinging, you have to be careful of this time. They have high impact news on Wednesday. This is a red folder news, and there's every possibility that the market might move in a different way. It is very, very normal. It's most likely spike to a significant extent. So if you are like a day trader that your trade is entering into the next day, you should already know that there's every possibility that it might go against you. So normally you're expected to close your trade the night before. So if you're a day trader that is trading probably NZD USD, on Tuesday night, you close your trade and you wake up without stress, so that you know that no matter what happens, nothing will affect your capital. Because movements like this used to make the market move. Please mute your mic. Who's this person? So as I was saying, then on same Wednesday by 7 a.m. there's GBP CPI. It also means that there'll be a spike. So if you are scalping, you should avoid this kind of scenario. If you are scalping on that day, you avoid that kind of scenario. If you are day trading or you are swinging, you might not necessarily have a problem. Do you get? And on Wednesday, there's FOMC. So if you're a day trader or a scalper, it is advised to close your trade before FOMC, because anything can happen during FOMC. FOMC is like a 50-50 chance. USD can be strong and USD can be weak based on whatever happens during the meeting. And FOMC movement doesn't necessarily happen immediately. It usually happens like hours after the meeting has been done. But then it is advisable to close your trades. If you are day trading and you are taking any USD related trades, it is advised to like close your trades before then. It affects other pairs too, but not as much as USD pairs, like anything USD, USD, Euro USD, GBP USD, NZD USD, USD card, USD CHF, USD JPY. It affects everything. Do you get? So that is putting fundamentals into consideration when you are trading also. Then on Thursday, there's Euro red folder news and there's GBP red folder news. So if you are scalping, you should be careful of that period. You can decide to enter the market after the news have come, so avoid stories that touch. Reason is that if you are scalping or you are day trading using 15 minutes or 5 minutes, if the market is going to go against you, it can go against you easily, because slippage and spread is usually higher during high impact news on any pace. That is the only problem with trading red folder news. You will just see sudden spike and increase in the spread. So the spread might normally be 2.3, 2.4, 2 point something. But during that spike, your spread can increase to as much as 10 pips. So that is why it is advisable to be careful with your trades during this period. So people that do not know, they'll just say, but it did not get there on Trading View. Do you get? But it is spread and slippage that took you out because of the high impact news. You'll be wondering why you hit SL when it did not get there on Trading View. It's basically just spread and slippage. And there's absolutely nothing you can do about it. Do you get them? By 1:30 days on them? So if your spread, if your stop loss is wide, you might not necessarily have a problem. So that is why swing traders don't necessarily have problem with high impact news, because most swing trades, the SL are usually like 40 pips, 50 pips, 30 pips and more. So all these 5 pips, 10 pips slippages might necessarily not affect a swing trade. Do you get? Except the major news like CPI, NFP, FOMC, those are the major news that can affect swing trades, basically. But most of the other news doesn't really affect swing trades like that, because your SL is wide enough to cover it most of the time. If the news actually favors your direction, you might necessarily not have a problem. So that is that. Then on Thursday, there's red folder on USD, there's red folder on USD at 1:30 and 2:45. So if you are scalping, be very careful. Just put that in your calendar. And on Friday, by 3 p.m. Fair Chef Powell speaks. So basically, for me now, seeing this, I already know that by 2 p.m. on Friday, I'm done for the week. Nothing concerns me again after 2 p.m. on Friday. Do you get? So that is how you plan your week ahead. You go to your Forex factory, note down the high impact news for your peers and the timing. So you're already prepared ahead. So if you are scalping, if you're a scalper or a day trader, you know that you have to be careful during that period, especially if you're analyzing. Maybe you are analyzing. The reason why it is important to also notice is that when you are analyzing and you now see that your entry is as already triggered or is about to trigger very close to that time, that is your village people. Most of the time is your village people, because that way it becomes 50-50. So it's better for you not to be in the market at all during that period as a scalper or day trader than for your trades to trigger during that period. So that will be all on fundamentals for heading into the new week. So let's get into the charts. Hope you can see my screen. Hope everyone can see my screen. So let's get into it. So the first pair we have is AUD card. I already started analyzing this. And like I said, it's very, very straightforward. This is like the 4-hour time frame. And like I always say, always follow the structure, follow what the market is doing. Where are the others? And sorry, just a minute. Okay, so as I was saying, always follow the structure, follow what the market is telling you. Look at this now. There was a shift here, there was a break of structure here, there was another break of structure here. This was a protected level that created this break of structure, and price came back for it. This was the inducement. Very simple. This was the target. Did it get there or not? It did. 6.83 RR. Then price came back for this protected level again. You can clearly see that it's a protected level. And the price come for it again. There was an inducement for it. Price came for it again. This was the target. Did 4.85 RR. Now price.
Boss, we can't see your screen.
Sorry, let me see what is happening. So nobody can see my screen.
At all.
How about now?
We are
We can
just
see it now. We can see it now.
Can everyone go through my screen now?
Yes.
All right. So let me go through that again. That was why I asked initially. So like I said, this was a shift. This was a break of structure, another break of structure. This is also a protected level here. But then, like I always tell my students, once the market has left that area, it can come back for it later, but always follow what the market is telling you and trade with the recent movements. Except price now ignores the recent movements, then you can now target the old point of interest. But most of the time, the market usually uses the recent movement. And this was exactly a perfect example. You see how it ignored this, it didn't get there before breaking the structure. Then you now use this as a protected level. You can clearly see it. Price came back for its inducement, 6.8 RR. This was the target. Then if you're targeting this close, you'll have gotten 4 RR also. If I was trading this would have been my target. You get the nearest external range liquidity is what I normally target. So that way you get out of the market on time instead of waiting and waiting. Because if you're targeting this, look at what happened. You see that it didn't get there and it has come back to stop loss towards entry. Spread will have taken you out because this happened around 10 p.m. You can clearly see it happened around 10 p.m. So the spread will have definitely taken you out of the trade. So the person taking this, if the person had not taken profits around 5 or 6 RR, the person will have hit a sell on this trade or broken even. So that is why I always tell people that if price is close to your take profit and you are already in a significant RR, you can close your trade. It is always important to always take profits. Always take profits, no matter what. Don't be like this thing is a draw on liquidity. It will get there. You can see that it didn't get to the final area. It didn't get to that final CP before reversing back. Do you get? And at this place, you will have been like it was going to eat, especially after this area was broken. After this candle, you would have been very, very confident that it will get there. But see what it did. It came for SL straight. Spread will have definitely taken this trade out. I am extremely sure. I am extremely sure about it, especially because it is an exotic pair. So the spread is usually big at night. So it will have taken this out, obviously. So this person would have not eaten, hit TP if it did not close. It will have been either break even or SL, despite getting to 6 point something RR, 6.3. Do you understand that? So it's not every time that you get the overall target. So if I was trading this is my TP1 here, 4 RR, this is my TP2, 5 RR, then this would be my TP3, which it got to. That's 6 RR. Do you get? So knowing when to exit is also very, very important as a trader. Then it came back for this protected level here. There was inducement for it, triggered. This is my target. I won't be targeting here normally. This is where I'll be targeting, and this is 4.85 RR. And the same thing happened here too. Even though this did not break structure, it is a liquidity sweep. But then this was a valid order block though, because it cleared this. It cleared this one. with a body close. So that was what made it valid, not necessarily because it did not break this structure. It swept liquidity, but it broke this one with a full body. So that was what made this valid, and there was an inducement for it. And now it has tapped into it and will most likely get here. So this is the target for this trade, and it's a 4.6 hour. So that's the recent market movement on AUD CAD heading into the new week. So after it breaks this, then you can now start looking out for further price movement. But as it stands, the market looks very, very bullish. Then let's go to AUD USD. I've already marked this already also. You can clearly see a shift. Like I said, I'm only concerned with the recent market movement. That was a shift there. You don't need to stress yourself going back. And then this is a break of structure here. So then this protected level, they've been mitigated, and I will show you why. If price comes here, it will most likely clear everything here. So there's no reason to be buying in this area. This has been mitigated by this candle. This week has mitigated this other block. Then after this came out, this came back inside and mitigated this other block. Do you understand? Then this has been mitigated by this. So there's literally nothing within this space anymore to push markets upward. Do you get? There's nothing here to push markets upward except the market decides to just do what it wants to do. But anything that makes this area break, it is definitely coming for this area. And it might break it. It might break it and come for this. So I break it and come for this final level here. So I come back for this. So I come back to sweep this area here. So this is the only unmitigated order block. That's the only unmitigated order block at this point in time. So anything that makes it break here is definitely coming for this. It's most likely coming for this order block. It's most likely ignore all these ones because they've been mitigated already. There won't be a lot of orders there to push markets upward. It might just get there and go up a little bit, but it's not going to push it upward the way some people will be expecting. Do you get? So entering into this, it has already done this already. It has already tapped into this bearish order block here, and it has already done 4 hours. So I'm just waiting to see what the market will do. But if I'm trying to buy, this is where I'll be waiting to buy from. So I'll have my buy order. I'll most likely have my buy order around here, pending the time the market comes down. Probably if it decides to give a liquidity or something, and if it comes down here, this is where I'll be targeting. So this is the only area where there will be a massive buy to the upside. If at all I want to buy, you can clearly see it. This was the area that started the whole movement. That was the origin of the whole buy momentum. So if at all it's coming down, it's coming for this. It's definitely coming for this. As you can see, it has already tapped into the bearish order block. So it might still continue down, but let's see what the market does during the week. But this is a very, very good buy point of interest for me. It's a very good buy point of interest. So let's go into CardChef. So this one looks bullish. It actually looks bullish. Yes, it's valid. It's actually valid. So when you zoom out, you clearly see this one is an overnight movement. That's an overnight movement. This is unmitigated. That is also unmitigated. So I'll most likely use this as an inducement. And there's also a break here too. So this, if I was planning to buy and I want a massive buy, this is definitely where I'll be buying from. Might have something like this. Let's see. Might have something like this and target it. Remember, this is a 4-hour time frame. And most Sundays, I usually look out for like possible swings. Then during the week from Monday to Friday, that's how we'll be going into the 1 hour, 15 minutes, 5 minutes entry on most pairs. But this is like higher time frame point of interest. You can't be doing 15 minutes chart review on a Sunday. It does not make sense. But you can clearly see that it is bullish. It is very bullish. So I'm trying to look for a swing buy. This is how I'll be looking for it. That's a protected level. That's a protected level. As long as it has broken all this area, that's a protected level. You can have something like this. That's your inducement. So if it breaks here, it's coming for this, obviously. And this is a 6-hour trade. It is not complicated at all. This is very, very clear. Very, very clear. The higher time frame. So you don't really have to spend much time on your charts once you know what you are looking for. So it was on an uptrend. That's a break of structure. Another break of structure. Another break of structure. We created that high. But where did this shift? It shifted here. Then it changed the group structure here again. So you should be looking for sales and not buy. And what did the market do? It came for this other block. And it's heading to this target, obviously. It's heading to that target. This is a 3.8. So this is where it's headed to, and it most likely gets there. So the thing about swing entries is that the entries are usually very clear. You can clearly see where the market is headed. You can clearly see where the market is headed. This has been mitigated. You can see has been mitigated by this. And this has also been mitigated by this handle. So there's nothing here. There's nothing there. So that was why I used this. Hope you understand. That's why I use this. If you don't understand, go and take a technical analysis class. So you can clearly see it is very, very clear. The market is going down. It's bearish. It's obviously bearish. And this is a protected level. If at all, there's going to be a change in trend on the higher time frame, this is where you'll be expecting to pick a strong buy. It is unmitigated. This is unmitigated. This is also good. Was it been mitigated? I think so. This has been mitigated like this. That's mitigated already. So there's nothing here again. There's nothing here again. But overall, it looks bearish like this. So it has been mitigated. And this is a very clean 3 point something around trade. So it can still come back and pick. It has not really picked 50% of this other block. So it can still buy from here. Actually, it can still buy from here. The market is very stoic, very dynamic rather. So the market can pick order from anywhere. Sorry, let me pause. Give me a few minutes. Yeah, apologies. Yeah, apologies. I'm back. So, as I was saying, that it can possibly buy from here. Can possibly still buy from here. That is a possibility. You can still buy from here and you'll be targeting here. Like I said, the market is dynamic. Someone that have caught this now will be out of the trade, so it can be a sell to buy. That's a possibility. Then another possibility is the market coming for this area here and targeting here also. This is your nearest target, but this is the overall target here. But you understand what I'm saying? This is a 10-hour trade. This is a 8-hour trade. So, but then if at all you're trying to buy on this time frame, those are the major point of interest. You have no business looking for buys before that, except the market gives you a reason to join the trend, and it must still be in line with the structure. It must still be in line with the structure. So that's just it. So that's just it. So the next one is Euro AUD. Next one is Euro AUD. Why am I distracted? I'm trying to do something. So the next one is Euro AUD. And let's see, what am I saying? This is a very complicated pair though. But then just train your eyes to see the structure. This is a break of structure, another break of structure here. Then this is the most recent high. Then we shifted here. Then it broke structure already. Broke structure here. So if I was looking for a sell, that's broken some point of interest already. But then looking at this structure now, if at all I'm trying to look for a sell, I'll be looking for it. Well, my time is almost done. I'll be looking for it around here. I'm looking for it around here. Let me see. Let's see. So this will be my sell entry. This will be my sell entry, and I'll be targeting here as my final TP. But these are areas where your initial targets should actually be. So if I'm planning to sell, this whole area is my supply zone. It can peak. It can start selling from anywhere there actually. It can start selling from anywhere there. But then This will be my own entry. Based on that, it is 50% of the whole order block. And there's an inducement for it, which it has already swept. So that's why I said it makes it quite risky. It just taps the liquidity at the close. It just taps the liquidity at the close of the market. You just swept it at the close of the market. So it might still come back for that order block. But if at all you're trying to sell, which looks most likely because the market is still bearish until it breaks this protected level, the market is still bearish. So I'll be looking for a sell around here down to this area. But my first target will be here, which is a 4R. My first target will be here, which is 4R. Then the second target will most likely be this 6R, the final CP 7 point something. But that is that for AUD. If you are trying to swing, this is what you should be having based on the current market movement. Then for Euro card, let me quickly do Euro card. Okay, this was coming from an uptrend. So like I said, always map out your structure. I have 7 minutes left on this time before I send another link for the rest of the pair. In the next session, that's how I'll touch Euro USD so that people will come back, because I know most of you are trading Euro. So you come back. So this is a clear bullish market, and it has broken structure again. So now, how do you trade this market with so many points of interest? You map out the nearest ones and the ones that have inducements before it. This is one. This clearly has an inducement before it. So you map out the valid ones. This clearly has an inducement before it. This is already mitigated. You can clearly see it has been mitigated. So I don't think there's anything there that's clearly been mitigated. So this is the unmitigated order block with an inducement. So this thing is like, this is the valid area to pick up your entry from. Then this is another one here. This is also valid, but this looks quite far to call an inducement, but then this is valid. This is also valid. And this, I'm not really sure. But then the market, okay, there's an inducement actually. I just saw it. There's an inducement here. There's an inducement here. So the nearest area, if I'm to pick a buy, and to pick a nearest entry buy, is definitely this one. Although it is not like 50-50, 50-50 like that. And the reason why I'm taking this is that if you notice this pair, it doesn't really use breaker block like that. It's usually use order block on the higher time frame. Like this now, this is also a 4-hour trade. If at all the market comes back for your entry, this could also count as an inducement for the 50% entry. So if at all I'm trying to buy a long-term buy, this is where I'll be looking at. This is the nearest point of interest. This is the nearest point of interest for this pair. Nearest point of interest. And if you zoom out, I don't think there's anything. Let's see on the daily. There's nothing there. So it should most likely continue. This is crazy. This is crazy bullish, man. Crazy bullish. If it comes back there, you can see what I was saying. It is also an inducement on the daily. So it makes this area very, very valid. Very valid as fuck. It might not happen anytime soon. It might happen in like a month or two, but this is very valid considering this inducement before it. It is very, very valid. It's giving the similar vibe around here on the daily. If you go to the 4 hours, there's something here that made this to buy. You can see exactly what I was saying. There was something there. I just knew there was something there. I have 3 minutes left. I knew there was something there. You can see. But there was an inducement for it on the daily. You can see it. So it uses order blocks with inducements before it a lot. That is just my observation. So, and there's an inducement before this. There's even one here too. So let's see what the market decides to do. But this is crazily bullish on all time frame. You can clearly see it even on the weekly. Very bullish as well. So that you have absolutely no business. You have absolutely no business looking for sales. You have no business with sales at all. You have no business. You have no business with sales at all. Absolutely no business with sales on this pair. So in the next video, we'll continue in the next session. I will still have a lot of pairs to cover. I'll try to be fast. I'm multitasking. That's why I've not really been focused in this session. But in the next session, I'll calm down and we'll go through the major pair. I think in the next session, we'll have Euro, we have GJ, we have GU, and this major pair. So that will be all. Let me stop this and create another link. I'll see you in the next session.